Hello, I'm Alex Davies, founder of Wealth Club. Today we're taking a behind-the-scenes look at seed investing in the UK and the impact of the SEIS scheme has on entrepreneurship and the wider UK economy. The Seed Enterprise Investment Scheme, SEIS for short, was introduced in 2013 to encourage experienced investors to invest in very early stage companies. SEIS qualifying companies must be less than 2 years from the start of trading and can have no more than £200,000 in gross assets. Because of the high risks of backing such young companies, the scheme provides tax incentives including income tax relief and capital gains tax relief of up to 50% of the sum invested. SEIS companies are often technology focused, and SEIS investment may be among the first equity funding they receive. To learn more, we're here today with two leading SEIS fund managers, Angelika Buraska from SFC Capital and Dominic Keane from BritBots, as well as Aaron Bates, co-founder of Hydrologic, a startup that's recently received seed funding from both SFC and BritBots. Firstly, Dominic, tell me, why is SEIS such a good scheme?
Well, there are three things that really excite me about investing in SEIS qualifying companies. First of all, it's an opportunity to work with great founders with tremendous vision right at the start of their journey and really direct them in a way that potentially sort of scales up very quickly. The second reason is a sort of financing point, in that you can invest in companies at a very early stage at very good valuations. And these companies, particularly in the UK, get the opportunity to get a lot of free money from government and tax credits, which mean that you effectively get quite a lot of leverage into the investments, and they can scale up very quickly on the back of that. And then the third point is, the downside for the investor is protected much more than any other scheme, in that, up to sort of 70 pence in the pound effectively is underwritten by the government if things go wrong. So those three attributes make it a really, really exciting investment category.
And Angelika, tell me, what are these tax benefits?
There are 6 main breaks. The most important is probably income tax relief, because it comes the soonest after the investment, and investors can get up to 50% back from their taxes, and they can also carry that relief back to the previous tax year. The next 2 breaks depend on the outcome of the investment. If it's a good one and there are returns, there is no capital gains tax paid on that. If an investment is unfortunately not successful, then there's loss relief, which makes that loss less painful, let's say. There is no inheritance tax. There's also so-called business investment relief, so there's no tax or charges paid on capital that comes to the UK and is invested under this scheme. And the last one is obviously capital gains reinvestment tax relief. So it's a very, very interesting and attractive scheme.
And Aaron, you've had SEIS investment. Your company's Hydrologic. Tell us, what do you do?
What do we do? So our mission is to end the use of diesel generators. We do that by making it very easy for end users of these diesel generators to adopt and deploy hydrogen-powered alternatives.
And you've recently raised money using SEIS. How good has this been for your business, and how did you find the process?
Yeah, so firstly, it's been, I think, pretty critical for our business. Over 50% of our money raised was from SEIS or EIS investors, both funds and individuals. So I think it really would have potentially doubled the time it took us to raise that money. So I think we'd kind of lined everyone up within about 4 months, kind of closed things down within sort of 5.5. So it would have meant that we wouldn't be where we are today, which I believe is kind of at the right place at the right time of this new market growing. We wouldn't be here today with something usable by customers. We'd still be further back in development and possibly not able to take advantage of the surge in interest in hydrogen currently.
So Dominic, what appealed to you about investing in Hydrologic?
So as a fund, our investment thesis is in automation, and particularly in energy transition, and using that as a spur to sort of the next generation of the economy. So hydrogen is an area that we've been fascinated by, as a fuel type of the future for all sorts of processes and industries. So Hydrologic was a really exciting investment opportunity to get a kind of an involvement in that market. And it just seems so obvious that these dirty diesel generators would be replaced by sort of hydrogen, cleaner, less noisy alternatives in time. So it was a very exciting place to start for us.
And Angelica, was it the same for you?
Yes, definitely. There were a lot of things to like about Hydrologic. The two co-founders with relevant sector knowledge and previous business experience. There was already one contract in place. I think a few letters of intent, and obviously the involvement of other investors was also very encouraging. So a lot of good things to like about it.
Right. And how important, Aaron, would you say SEIS reliefs have been to getting investors?
So they definitely made a big difference in certainly bringing on those early investors. We were able to bring in we brought together two things to accelerate the process. First, we had a small amount of grant funding that brought with it a certain level of diligence, but equally then friends and family, and crucially a couple of angel investors from the sector, energy sector and supply chain. They would not have invested without SEIS, and they actually helped us both in a networking and momentum perspective, then approach people like Dominic and Angelica here, as well as our other investors. So,
okay.
Yeah.
So very important.
Very important, absolutely, yeah.
And Angelica, is it a typical type of company you'd invest in?
Yes, I think that this is a very good example of a company that we would invest in. We look for co-founders, 2-3 co-founders with complementing skill sets, with the right market knowledge and experience. It's always about people and about the market. We are looking for co-founders who are bringing innovative solutions to growing markets. And when we are assessing investment opportunities, we are looking also at other things like previous business experience, IP situation, financial acumen, but also the metrics of the funding round. So how big it is, what the valuation is, from the perspective of the future journey that the company has to make, the next funding round, the exit. So our methodology takes into considerations a lot of factors, but those that I mentioned are probably the most important.
And Dominic, is that the same for you?
Yes, I think so. And just going back to the point that Aaron made about the grant, as I said earlier, a lot of these small companies are able to benefit from Innovate UK grants and tax credits. And this means that there's you can extend the runway and the delivery pathway of the businesses much more than just the capital in the round itself. So it's a really good opportunity for a hugely exciting sector like the hydrogen space to actually get a business of some substance built out over the first couple of years, and then be in a position to take that proposition, if it needs, to larger institutional investors at a much higher valuation.
So the economic climate's changed a lot over the last few months. How's this affecting you and the companies you look for? I suppose, Angelica.
Well, despite the current economic climate, we are very, very positive about the future of investing in early stage startups. Crisis or recession can be very stimulating for entrepreneurs. So unlike big business that might go into some sort of standby mode, entrepreneurs will be looking for solutions and will be bringing those new products and ways to do things better. So we are expecting to see as many, if not more, entrepreneurs coming with very good ideas that we can back with funding. From the past, we know that Crisis was producing very good brands. Just to mention the most prominent, like Pure Gym or WhatsApp, but obviously there were many, many more. We've been around for 10 years now, and we have seen a lot of difficult situations. The last pandemic, that was a very good time for startups. So for us, this is promising. We expect to see more stars being born.
Dominic, do you agree? It's a good time to invest?
I think it's a very interesting time to invest in this sector. I think entrepreneurs have to be perhaps more wily about using their money wisely over this period, because the visibility of the next funding is probably a bit further away. But I think from the investor's perspective, in a sort of high inflationary period, actually, locking your capital up into something which has the potential for very high growth over and above the high inflation is actually a pretty interesting strategy for that sort of high risk part of your portfolio.
And Aaron, you are the young entrepreneur. How is it affecting you?
Yeah, I think it's affecting us with two opposing forces, so we'll maybe land back in the middle again. We sell into industries where the planning time from where a budget's set to then when execution of that project happens can be quite long anyway. So construction, even festivals and film and TV, they'll have worked out their budget based on one cost base. Now we're at a time high inflation, that cost base has gone up, squeezing their ability to look at new technologies, new things. However, equally it's high because energy prices are high and diesel is currently very expensive. So it's enabling them to actually, or forcing them to stop and rethink about, well, hang on, should I be using diesel? Could I look at hydrogen? Could I look at reducing my energy consumption or switching to something greener? So actually it has also had the effect of driving a huge amount more interest. So I suppose it's our job to find the path through the middle.
So but essentially lots of opportunities for you.
Yeah, exactly. And I think to the point both Dominic and Angelica have made is that in a time of high stress, you have to, that's when you get the most innovation happening. And I think it's pushing our customer base to think more individually, not just ourselves. So ultimately that's good for us.
Very good. And Angelica, where are you finding the interesting opportunities?
We have three main streams of opportunities. So as the most active investor in the UK, we are already quite well known, so entrepreneurs come to us directly. We have a lot of introducers, investors, existing investors in businesses and mentors who work with companies, and when they are ready, they send them our way. And finally, we have a network of partners, so we proactively participate at events, demo days, workshops at universities, incubators and accelerators. So we have a lot of sources, but those three are like the main ones.
Dominic, is that the same for you?
Similar, yes. I mean, we're a focus fund on automation and sort of productivity improving technologies. So our sort of pool of entrepreneurs is smaller, and we've got a very good network within the sorts of conduits which are leading to these sorts of business and amongst the entrepreneurs themselves. But because of the world we live in, it is such an exciting time for automation, with labor costs being high for businesses, with energy costs being high. The focus for the end user to automate is higher than it's ever been, and we're seeing a real pull through from the companies that are sort of standing up to try and solve those problems at the same time.
Certainly. What would you say the biggest challenges are for SEIS investors at the moment?
Well, I think an SEIS investor has to recognise that investing in very, very early stage companies is a high risk game. So it's important to spread your risk as much as you possibly can. Funds are a vehicle to do that, and even investing in a number of funds can allow you to get that breadth of exposure, so that you can effectively ride the whole average of the market rather than any specific very, very high risk company. So that would be the kind of first point I would make.
And Angelica?
There are a lot of challenges related to SEIS. I would say from our point of view, the limit of £150,000 per company is a risk, because it means that rounds have to be a bit more complex. Companies need more money than more than £150,000. We are fortunate because we have our EIS funds and network of business angels who can participate, but that round has to be a bit more complex because of that limit. SEIS has to stay within a company. The company has to stay eligible for another 3 years after the investment. That's something we have to monitor. However, we have been around for so long that we already know those things, so we manage those challenges quite easily. But yes, they are still challenges.
And Aaron, how hard has it been to raise money?
Well, I think from the raising perspective, that we kind of touched on a little bit earlier, but it's been easier because there's been SEIS there. But equally, I think from the perspective of, Angelica was mentioning it already, that 150,000 on the SEIS means that even in our round, we were having those discussions of who got the S and who just got E. And so it adds a complication which I think doesn't help anyone, because typically I think most companies need to be raising above between 200 and 500 at that stage that this typically comes in. That's my opinion anyway. But equally also the challenge around the limitations of what your business model can be. And for us specifically, that's around we're not allowed to lease anything. So that limitation on what your business model can be means that actually opportunities that were there for us, which we could have more easily answered already, we have to find slightly more complex ways of delivering the value to the end customer so that we can still grow but still stay within the rules. Yeah.
And turning away from it, SEIS just is how easy is it a place to set up a business, do you think, the UK, from your own experience?
Oh, I don't know. I don't have experience setting them up anywhere else, but I think there's some things that help a lot. So there is this scheme. I think that is one that makes it of a good, really good help. There's definitely a lot of good advice around, but you need to be able to go leverage your own network and go ask for that advice from other startup founders, other investors. I think there is inherently still general, not just in the investment space, but a kind of traditional view of investing into bricks and mortar. There's a kind of slightly greater risk adversity, which you get from the UK. So you get a lot of questions about how to protect against downside and slightly fewer questions about how you're going to accelerate your growth. Maybe that's a way of determining who's a better investor or not, I don't know. But it's been easy enough to set up a business here. It's been good. It's been a good experience. I don't know.
Very good. And finally, is it a good time for investors to invest in an SEIS?
I have no doubt that it is, with the right strategy. It is, as I said before, a very stimulating time for entrepreneurs. There will be stars born. And SEIS investment is a long-term investment. It will go beyond recession, beyond crisis. So it is a very good time. Obviously, some companies will fail, but there will be companies that will do very, very well. And that's why it's worth investing. Diversification, however, is very important. Because
it is risky, isn't it?
It is. It is definitely risky. But when you diversify, that risk is spread, and statistically, someone will be successful. Some company will be successful. So I think it is a very good time to invest.
Dominic?
Yeah, I would agree. On a sort of anecdotal basis, prior to starting BritBot, I began a software company in the middle of the sort of financial crisis of 2008. And I think the disciplines of entrepreneurs which begin their businesses in really tough economic times are almost invaluable. And, investing in these sorts of periods can be the best time to find the ultimate, big winners, because they have to have such strong financial discipline kind of from day one of the business.
Good. Well, I totally agree with all of you've said. And Dominic, thank you very much. Angelica, thank you very much. And Aaron, thank you very much for coming in today.